There's a new war in the Middle East, and it is sending absolute shockwaves across the globe. And this isn't just a regional crisis, it's a global economic event that is changing the price of oil and gold right before our eyes. So today, we're going to break down exactly how this all happened, what it really means for the world, and what could possibly happen next.
It all happened so fast, in less than 48 hours. First, you have the strikes on Tehran. The very next day, a bombshell. Confirmation that the supreme leader is dead. And then, bam, the move that put the entire global economy on edge. A direct radio warning from Iran to every single oil tanker in a vital shipping lane. It's this rapid-fire escalation that sent markets into a complete tailspin. And this is the geographic flashpoint. The Strait of Hormuz. I mean, look at it. It's just 21 miles wide at its narrowest point. A tiny, tiny bottleneck that is somehow responsible for a massive chunk of the world's energy. This one little waterway has now become the absolute epicenter of a crisis that could derail the entire global economy. Okay, so what did this actually do to the markets? What was the immediate financial fallout? Well, as you can probably guess, the impact was both incredibly swift and incredibly severe.
I mean, just look at this. It was a 1-2 punch that happened almost instantly. On one hand, you have oil. The fear of supply getting cut off immediately tacked on what traders call a risk premium, an extra $10 for every single barrel. At the very same moment, investors scrambled to get away from all the uncertainty, and that pushed the price of gold up by $110 an ounce. This wasn't some slow burn, this was a straight-up market explosion fueled entirely by geopolitical fear.
So, to really understand the panic in the oil markets, we have to zoom in on the Strait of Hormuz itself. We need to understand why this one little channel has so much power over the world's energy supply. I want you to just imagine for a second you're a captain on a massive oil tanker, and this message crackles over your radio. No ship is allowed to pass the Strait of Hormuz. That's not a polite request. It's a direct threat, coming from the Iranian Revolutionary Guard Corps. It's a terrifying reminder of just how much geopolitical leverage Iran can pull on the world's energy. So what's really at stake here? What's the big deal? Well, you can pretty much boil it all down to this one single number. 20%. Just let that sink in for a second. 1/5 of all the oil the entire planet consumes every single day has to squeeze through this one narrow passage. So a threat to close the strait? That's not just politics. That's a threat to literally turn off the tap for 20% of the world's energy. And look, it's not even just about oil, which is crazy enough. That same strait is the pipeline for 20% of the world's liquefied natural gas. That's the stuff that heats homes and powers factories all across Asia and Europe. Then you throw in another 11% of all other global sea trade, and you start to see why this isn't just an energy crisis. It's a crisis for pretty much everything. So, of course, the experts have already run the numbers, and well, the scenarios are pretty grim. A moderate shock with just a little supply disruption, and we're looking at maybe $90 a barrel oil. You get to a severe shock, blocking more ships, and we could see prices between $100 and $120. But the nightmare scenario? A full, extreme closure of the strait. That takes over 15 million barrels a day off the market, and you're seeing prices blast past $140, a level that would almost certainly trigger a global recession. All right, let's switch gears for a minute. That's the story with oil. But what about gold? While oil is spiking because of a physical threat, a supply cut, gold is rallying for a totally psychological reason. It's what we call a flight to safety. And this is where gold steps into its classic historical role as the ultimate safe haven asset. Basically, when everything feels like it's falling apart, when investors lose faith in stocks or even currencies, they run. They run towards something solid, something real that has preserved wealth for centuries. Gold becomes the ultimate shield against all that chaos. So, just how high can this flight to safety push the price of gold? Well, the new number being thrown around by the big players, it is absolutely staggering. $6,300. That's the new year-end price target for a single ounce of gold. And let me be really clear here, this isn't just some wild guess. This is coming from financial giants like JP Morgan and UBS. They're essentially signaling that they believe this level of global uncertainty isn't just a blip on the radar, it's the new reality. Okay, so this is really the key takeaway here. Both prices are spiking, right? But they're being driven by two totally different stories. The oil story is all about physical risk. Ships that can't move, supply shortages, insurance costs going through the roof. But the gold story? That's all about the invisible stuff.
It's about feeder. It's about hedging against the inflation everyone knows is coming from high oil prices, and it's about a loss of faith in traditional money. But here's the thing. These price spikes don't just stay on a trader's computer screen in New York. Nope. They create a shockwave that rolls out across the entire global economy, and eventually, it's going to hit your wallet. This is basically how the dominoes fall. It's a chain reaction. Step 1, oil prices spike. That immediately makes it more expensive to transport, well, everything, and to manufacture things. Step 2, businesses aren't just going to eat those costs, right? They pass them on to you and me, which leads to step 3, widespread inflation. And that forces the hand of central banks, who have to abandon any plans to cut interest rates to fight this new inflation. And the consequences for everybody day to day, they're very, very real. We could be looking at U.S. inflation hitting 6%. Global economic growth is expected to take a hit. And for all of us, it means paying more at the gas pump, paying more for groceries, and paying more for pretty much everything we buy. Key industries like airlines and chemicals are going to face a world of hurt, and entire countries that need to import their energy, places like India, could be facing serious economic instability. So that's the mess we're in. The billion-dollar question now is, where does this all go from here? The future of the global economy really could hinge on how this conflict evolves. Right now, experts are basically watching for one of 3 potential outcomes to unfold. Think of them as 3 different paths this whole crisis could go down. Okay, scenario 1. This is the best we can hope for. The conflict gets contained, it doesn't spread. Now, the crazy price swings might settle down a bit, but don't expect a return to normal. That risk premium we talked about, it's probably going to stick around, keeping oil prices elevated for a long time. Then there's scenario 2. This is the one that keeps economists up at night. A sustained blockade of the Strait of Hormuz would cause oil to surge past $130 a barrel, and an event like that would almost certainly tip the entire world into a very painful recession. And finally, there's the third possibility. It's a new normal of just prolonged, unresolved tension. In this world, that flight to safety never really ends, which keeps gold prices high and just bakes volatility right into the global economy. It's a world where everyone is always on edge. Which brings us to the final critical question that's really going to define the next few years for all of us. Is what we're seeing just a temporary market shock, something that'll eventually blow over? Or are we actually witnessing a permanent repricing of global risk itself? The answer to that question, well, it's going to shape the economy for everyone.